to save, but the money you save must be invested and it must be diversified in such a way where it's balanced. So you want some exposure to growth, you want some exposure to, to things that are conservative, all the different things and metrics across the board. And I think that, real estate, whatever, land, whatever, I can go down the litany of things that you can invest in, but pretty much it's succinctly a balanced investment portfolio, and make sure that your money is always working. If your money's not always working, then I think that, you're keeping yourself at a disadvantage to other investors.
Welcome to the Global Investor Podcast. My name is James Evenson. I'm one of the partners at Crown Private and our investor syndicate, Obris by Crown Private. Our membership and our community are made up of like-minded, yet unique and adventurous individuals, as well as family offices. We invest in a spectrum of deals from established companies to startups, and we do so with a proven formula of due diligence, structuring, and management. Our guest today is LeVar Fraiser. LeVar is one of the members of Obris, and we like to periodically spotlight our members so that we can give our viewers and our listeners a glimpse into the lives as well as the investor prowess of the people who are actively involved with Obris. So a little bit of a background on LeVar. He holds 2 patents, plus has 20 years of combined experience as an engineer, an executive, an entrepreneur, and an investor. He founded his first business in 1997 and successfully exited that venture to go on to fund and found, or in partnership with others, several other small multi-million-dollar enterprises based in the metro Atlanta, Georgia area of the United States. Now being semi-retired, LeVar has begun to consult and share his knowledge and insights on business and or strategies that he's learned throughout his tenure as an entrepreneur and as an accredited investor. Hey, welcome, LeVar. Thanks for joining me today.
Thank you. Well, thank you for having me on.
Where do we find you today?
In Milton, Georgia. So where I live at now.
Milton, Georgia. All right, very cool. I shared your brief bio with our listeners and viewers in the preamble, but I have a few more questions because I know that there's much more that defines you. So let's start with, where did you start your career, LeVar?
That's a good question. So it's been been a long time. So just as I would say, from after college, I started my career at Bell & Mobile. So it's in Maryland, and I started my engineering career there, telecom.
Oh, okay. Very cool. At what point did the entrepreneurial side kick in for you?
Well, I'd say probably right around that time, because when I started there initially, I did a short stint when I was in college at Northrop Grumman, got some secret clearances, did some work there at ESSD, and because it was a secure facility, we had to build our own computers because you couldn't take hard drives in and out and so forth. Long story short, we had our own computers, built our own computers. So I started a little IT business, like my sophomore, junior year in college, and carried that forward and took a job at Bell & Mobile and started building computers and for labs, and wound up getting a contract for the state of Maryland, and then got a contract with a mortgage company in the Southeast, and just kind of expanded with some nonprofits. Wind up getting with a buddy of mine from college. We developed some software for real estate agents. That's kind of where it started, just that piece of it.
Okay.
Started there and then just expanded.
So you were able to run official career, and the entrepreneurial side parallel, and then sounds like crossing over a fair bit as well.
Yeah, exactly. So that's how it started, and then the business started getting busier than work, and then eventually I said, okay, maybe I need to try to go out on my own full time. So that's pretty much where it began.
Very good. So what about your investor side? When do you think that kicked in? Or do you remember?
Yeah, I remember when I actually started making some money. So I would say probably I had been in business. I started business, like I said, 97, kind of part-time in and out, and then went full-time in 2000, 2001. And I would say probably around 2009, 2010 was when I started to dabble in some investments, some equity investments, real estate investments. And, from there, it just grew into, being a partner in a couple different firms. A couple friends wanted to expand in different markets, and just had an interest to try to dabble in entrepreneurial spirit, to dabble in some different things. And that's where I really started to get into some of the investment and enjoyed that part of it.
So we fast forward now, you said it was right around 2000, you said?
Well, investments around 2008, 2009.
Oh, okay. So we're now going on.
Full-time entrepreneurial business around 2000.
Gotcha. Okay, very cool. So you describe yourself as being semi-retired. Now, looking at you, you're at the point in your career when most people are still building their careers. How did you decide to semi-retire? What's behind that, and what does that actually mean for you?
Well, I've been blessed to, like I said, make some decent investments in commercial real estate, and then in, some stuff in, obviously, blockchain, fintech, and had a successful telecom company engineering wise. So because of just either being in a partnership or having these different ventures, I've been able to draw either a distribution or a check or some type of royalty from, those entities. And it's just kind of put me in a position financially, aside from this past pandemic, where I've had some discretionary or just excess and overflow, and from a monetary perspective sometimes. So being semi-retired means for me that I'm at a point now where I'm doing work that I'm taking jobs and being selective on what I do. I'm leveraging more of my relationships. I'm collecting a regular income from my investments, and the amount of effort that I put in terms of work every day has gone, down probably about 70-80%. Now, that doesn't mean I'm not busy. I'm just not physically as busy as I was with, working at either one of my telecom companies or my commercial real estate business.
Sure. So what does semi-retirement look like then? If you're not focused so much on the business side, how do you spend your time?
Oh, so this year being a different year than most. I spent a lot of time with my son and my daughter, and my son's very active in sports, so I've been spending time with them. But then also being able to look at different equity investments and opportunities. There's two companies that I'm, just kind of some friends that I know that are starting up a sports facility complex here in Georgia that it looks like I'll be investing in, and so we're just trying to work out the deals. It's a nonprofit that's starting that up. So that's something that I'm looking at, and I'm just taking a board seat on that company. I'll give them some seed money there. There's a friend of mine that's starting up wants to start up a dealership, and so I like cars. So I said, hey, I'll give you a little, something to take a little chunk out of that as an investor. So we're working out the attorneys are working out the logistics on that. So that's a lot of what I'm doing. Just kind of looking at deals, doing some consulting work. Obviously, Rolf very well, and Reggie. So we've been doing very well with our consulting, and that's a lot of fun because we're helping miners get started. We're helping educate people on mining and the whole cryptocurrency. I call it Kryptonians, but help them just get an understanding of what it's involved with and how to get that started. So we're doing some consulting work. So that's basically. And from my engineering company, I've been able to pretty much offload a lot of the installation and construction work to where all we focus on now is design and engineering work for 4 or 5G solutions. So, like yesterday, I was at Fiserv, doing something and kind of at their facility to try to get them ready. So, anyways, things like that.
That sounds great. Just to give people the background, you mentioned Rolf and Reggie. So Rolf introduced you to Obris, And you and Reggie both joined us in Panama a couple years ago. That's actually where we met. And the three of you have, are you still calling it the North Georgia Crypto Mining Company or something?
Yes, sir. Yeah,
akin to that? So you got your feet wet in doing your own crypto mining, and now you guys have added on to that consulting for others who are wanting to set up their own. You guys have a phenomenal setup there. I've only seen it on video, and we interviewed Rolf, sometime last year about it. So I imagine things are just hopping right now with where crypto assets are on the still on a meteoric rise.
Yeah, I mean, it's buzzing. I mean, we get a bunch of requests every day for consults, and calendar stays pretty full. So we're booking those out, in the future, obviously. So a little bit of backlog there. It's been really good, obviously, just like I said, just because of the explosion in the price, but there's been a lot of good things that have gone on in the industry at large. I mean, it's not all just the price. There's just been a lot of positive things that have happened that, people that are just coming into it. We had a call yesterday, me and Rolf, and we had a call where the guy, Rolf, had asked him, why are you getting into this? A lot of people start off and say, well, I just want to make a lot of money. And then we tell them, hey, it's just like any other business. It has a cycle. So, if you buy at the peak, then most likely you're going to take a haircut. So one of the things you want to do from an investment perspective, which is what I explained to this gentleman yesterday, is, you look at where the highs and lows are, and you try to buy in or get in at the bottom, or where it's a down part of the cycle, where, the cycle's on the downside. And then that way you can ride that upward potential and opportunity of gains that come along with that. So that's a big part of what I've been doing lately, just trying to educate, some of our customers on that, and spend some time with the family, and then just do stuff that I really enjoy and that I like.
Yeah.
So that's where I'm at.
That sounds like fun. It sounds like a lot of fun. I know it's not. I'm sure that you've earned a few gray hairs along the way. A lot of probably earned more than you have. Well, hey, one of the reasons that I wanted to interview is that we like to spotlight members periodically in our interviews. So I want to speak about Obris briefly, and that is just ask you. I already mentioned that Rolf introduced you to Obris a couple of years ago. He came to Panama, and you decided to become a member. What led you to become? What convinced you that you wanted to be a member of Obris, and what was the draw, and why do you continue on with us?
Well, it's a great question. So, as an independent, investor, one of the things that you find is that you make a lot of bad decisions. And so, like I told you, all these investments that I started along the way, not all of them have been good. And so when you start you don't vet things out properly, or it's a friend of a friend, or it's somebody that comes along, or you think you did some due diligence, and you look at a term sheet, and your attorney looks at it. That's the kind of investments that have kind of plagued my investment career up until I joined Obris. And so with your organization, there's a lot more vetting that goes on. There's specific people that have expertise in various areas that can provide some validity, or some sound judgment and insight onto whether or not something's a good investment. And one example of that was, I forget the gentleman's name, but when we were in Panama, I had a couple people approach me about a cannabis investment, and I sent it over to I forgot his name, but
John.
Yes, I sent it over to him. He took a quick read and said, "Stay away." And so that's the kind of expertise that you can get from being a member of Obris.
Yeah, I felt when you were in our, when we were in each other's company, I felt like you were a really good fit, because you have the success behind you, and you have the competence as well as the confidence. And much like others in the group, I recognize that you would be in a similar position that John was in with you, and that when somebody asks you for candid guidance on something, you have if it's in your bailiwick, you have the expertise and the confidence to actually say, you know what, here's how you really should read it. Yeah, no, very, very cool. Well, let's talk about your investor side because, Obris, the three pillars are people, places, deals. I would like you to share with our investors, our listeners and our viewers, what is your perspective on investing, or what is your approach to investing?
That's a good question. So for me, I kind of very much like you. My family was more of a middle class family, so we kind of chugged along and have had some success and kind of moved along in the ladder of financial wealth and means, and still by no means where we all want to be at, but we're making progress. But from an investor perspective, what I try to do is be opportunistic. And so my nephew just started a logistics company, and so I'm constantly talking to him and mentoring him about some things. So 20 years of being in business, trying to make sure he doesn't take the same pitfalls. So from an investment perspective, opportunistic. So having liquidity or having means to be able to take advantage of opportunities that come along that may or may not ordinarily present themselves on a reoccurring or regular basis. So that to me is one of the things that's paramount, is just being ready to pounce on an opportunity that you see. The second thing that I'd probably throw in there is that I just mentioned to you, I try to find things that I feel like they have some type of, I can understand them. They're simplistic. They may be complex, but I can understand it. I can talk to you about it. We can it's not tricky. It's not confusing. Because I find that if I don't understand something, if I don't feel like I can relate to it or have any insight that I could share, or you can't make it plain to me, I don't think it's a good investment for me. It may be a good investment for someone, but it's not a good investment for me, because in the past, I've been burned by deals like that. So I stay away from stuff like that. So that's probably the second thing, where I just like to make sure that it's something that I can understand, even though I may not be intelligent upon it, at that time, but with the proper education, it's something that I can understand. It's straightforward in the sense that I can get my money out of it. I know where I put money in, and I know how I can get money out. So if all of that's there, and then it's something that I feel like it actually makes a difference in some way, then I get excited about it. And I feel like it's something that I can invest in. So that's the second thing. And then the last thing is really just like, as I explained to one of our clients yesterday, is being, understanding the cycle of a business. Every business, I don't care how big, how successful, or how large, has a business cycle. They don't make money every single year for hundreds of years without ever having a down cycle. So if you can understand every sector, industry, or organization, corporation, what have you, where they are in that cycle, and then you have an opportunity to invest from an equity perspective, or from whether it be public or private, but you already have an opportunity to invest in that, then that's always, I think, good to have that in your mind. So those are three things that kind of drive me as an investor.
Great, thanks. And as far as sectors go, are you drawn to particular sectors? So far, what I heard was, I wouldn't call it a hodgepodge, but your criteria are things that you get, that you recognize. You see the value of them. You see where they are in their life cycle. How do you define the sectors that you choose to invest in? And are there areas that are just off limits?
Well, I think that there are some areas that are off limits if they're not kid friendly. So if it's not something that's kid friendly or really family friendly, then it's not something that's going to get my dollar. It doesn't mean I don't like it, or I don't. It's just something that I'm not going to invest in. I just can't do that with a family and kids. And I've had opportunities presented to me where I felt like the moral fabric of that opportunity just didn't meet the litmus test of something that I want to invest in. But as you said, sectors are things where it changes. I mean, if you ask me 10 years ago, where did I think that, or where I invested or wanted to put most of my money, I'd tell you in real estate. But now I'm more looking at public and private equity stuff. So it really just depends. And the reason for that is obviously the significant amount of return. So I try to always have a balanced investment portfolio, just like I have a balanced investment if I have invest in stocks or funds or whatever. I just try to make sure it's balanced. I don't overweight in one sector or another, but there are areas where I feel like there's a lot of growth opportunity, if you will, and that's things like software, social media, things that are driven in that space. Obviously, blockchain technology. I'm in that space, and so I think that has a lot of upside potential, and it has done really well for us, me, Rolf, and Reggie, over the past 3 or 4 years. So. But I'm also a big person on commercial real estate. I like commercial real estate. I still, am involved, have properties in that regard. So I think that's a business that's more cyclical. So you've got lean years where you've got to make sure, like last year, you've got to make sure that you've got some, excess liquidity there. And then you have years where it's very robust to where you're actually, building up. So those are sectors that I kind of invested in, software, technology, and my background is in engineering. I'm electrical engineer by from education, so yeah, that's something that I definitely understand. So wireless technology, those things, I definitely am very bullish on those.
Yeah, that's actually that you have a great foundational starting point for coming out of having your technology expertise and the years of experience there, and particularly in this day and age. I appreciate hearing what you consider a balanced portfolio, or how you want to structure your portfolio. I ask that question of people oftentimes, and I think that's partly just because I benefit from hearing how other people structure it. I have a tendency to get weighted into certain things, particularly things that I know well. Okay, so LeVar, one thing that you mentioned to me before is failures. We've all had them. You've told me that you have learned in your world of investing, you endeavor to learn from your failures. Tell me about how that plays out for you.
Oh, that's a great question, James. So, I go back and say that's one of the reasons why I joined Obris, to basically minimize the amount of failures that I have. Because again, I think that, failure as a teacher, it kind of gives you an opportunity to learn. But the problem is when you're dealing with, real dollars, that learning can be painful. So sometimes if you go out and you make a wrong turn and you get lost, and it's not, you may waste a tank of gas. But if you go out and you make a bad investment and you spend a couple $100,000 or a few $1 million on something, that it sticks with you. It's not something that you get over real quick. So failures have definitely, as I mentioned to you, drove me to look at investing by partnership, so to speak, or in a crowd. So I'm more akin now to look at something and say, hey, James, what do you think about this? This is in your sector. What do you think about it? How do you feel about it? What have you seen? Where do you think this is at? And if I don't feel like someone that I respect and trust, like yourself, is really comfortable with it, or feels like it's something of any significance, I probably would just stay away from it. Mm-hmm. So that's really what the failures have done for me. They've gotten me to tighten up my belt. I'm definitely more knowledgeable about investments now, but I would say that I'm definitely more cautious. Before I'd say, it's only this amount, or it's only that amount. Okay, well, let's roll the dice. And I'm just, you start running out of cash, you can't keep doing that.
Well, at the same time, building up a family and, when you're in your 20s, 30s, there's more room for the higher risk choices. And likewise, we're not as wise in our 20s and 30s as we are in our 40s and 50s. Yeah. So one of the things that has struck me since I first met you is that I think you're a really competent teacher.
Well, thank you.
And I would say probably coach, mentor would also qualify. I realize those are three distinct things, but what I really appreciate is how you understand complex matters, and then you break them down into simple pieces that your audience can understand, the person that you're interacting with. Right. I see that as you talk about how you're the teaching moments with your kids, but just likewise, when we were in Panama, as we were breaking down potential investments. Anyway, I really appreciate that about you. because it's not off-putting to people. In fact, I think it actually endears you to people that they recognize you as someone who is wise. Where am I going with that? There is a question about that. So I think we can take it as a matter of fact that you are someone who is actively teaching, mentoring, coaching people along the way. So what do you wish that someone would have instilled in your 20-something self and then in your 30-something self?
Oh, that's a great question. And it's exactly what I talk to my nephew about almost regularly since he's going down this path of entrepreneurship. One is to limit your exposure, your financial exposure. Because when you're an entrepreneur and you start out, the first thing you always just focus on is just making money. And, you want to provide services, and obviously if you can do good and you can make money, then that's what you want to do. But the other thing you don't think about is protecting those assets and limiting that exposure as you're doing that. And I think that some people are further along because they had somebody in their family that, like I said before, my family didn't start out that way. So they have somebody in their family that educates them on, hey, when you have a certain amount of means or certain things, you need to make sure that they're in a trust or they're protected here, or you've got a novice LLC or whatever. You got something set up that is going to minimize your exposure when, because it's not a question of if, it's when some event comes along, and then you need to have that shield there. So that's one thing I think that if I would have known that 20 years ago when I first started business, that would have been very, very, very helpful. The second thing that I think is equally important is, as I mentioned to you, when most families are taught to save. And I say not all, because I don't know all, but I'm just saying most families from where I grew up and came from were taught to save. And savings was, having a certain amount of money in a bank account or under a mattress or in a safe, wherever you feel comfortable putting it. Right. But somewhere where effectively it's really not working for you. It's not really generating. I always joke with my nephew and say, Benjamin wants to have more Benjamins and he wants to multiply and thrive. So having that money under a mattress or in a safe or in a bank account traditionally is not going to, it's safe, but it's not necessarily going to allow that to really grow in earnest. So I think the message to my children, what I've been telling them is to save, but the money you save must be invested and it must be diversified in such a way where it's balanced. So you want some exposure to growth, you want some exposure to, to things that are conservative, all the different things and metrics across the board. And I think that, real estate, whatever, land, rent, whatever, I could go down the litany of things that you can invest in, but pretty much it's succinctly a balanced investment portfolio, and make sure that your money is always working. If your money's not always working, then I think that you're keeping yourself at a disadvantage to other investors. So those are the two things really that from an educational perspective or mentor, that very simple. But I think that if you instill that in someone early on before they start actually earning some money, it just saves them, just gets them further down the road than where we are now if we'd known that 20 or 30 years ago.
Absolutely. Yeah, that would have been sage advice in our 20s, and both those pieces in our 20s and 30s. Well, let's stay on the education front for now, because you have a podcast. Clearly, that is a priority for you in teaching others. Just so our listeners and viewers know, the podcast is the CRF CRF Ventures podcast.
Adventures. It sounds like we're going on the journey.
We are. We definitely are. So who is your audience there? Who are you speaking to?
Well, I'm speaking to people that are like me, or like us. I mean, not any specific race or demographic, but people that are looking to get into investing. They don't know where to start, and they think it's hard, it's arduous. The terms or the terminology or the barrier to entry is too high. And so what I'm trying to do is just break it down and say, hey, listen, if you can save $1 a day and invest that, then it puts you on the path to where you need to go. If you can have money set aside that you can then take advantage of opportunities, then that's going to put you down the road further than where you are and more toward where you want to go. So
Sure.
That's really what the podcast is about. It's about getting people to understand that investing is not just something that you do once and set it and forget it. It's something that you do throughout your entire life. You change the focus of what that investment strategy may be along the way as you learn or exposed to more things, but you always have to put your resources to work. And I've always been a good saver, but I haven't always been a good investor. And so I think that my message now to my children and to everybody that's in my circle of people that I communicate with and all my listeners is that invest your money. Don't let any of it rest for too long in a bank account. Obviously, you need money in a bank account, but make sure that the majority of the money that you have is working, and that could be in private equity, public equity, real estate, private, like residential, commercial. Obviously, commercial is a lot more expensive, but wherever you can put it to work. If you're getting 5, 6, 7, 8, 9, 2-3%. When you start getting like 1/10% or a fraction, I don't understand. For me, it just doesn't make sense to keep.
Sure. That actually leads me to an unrelated question. I'll come about commercial real estate. I'll come to a little bit later. On staying with your podcast, what are your plans for the future? I think you've done a few episodes so far, and clearly you have a wealth of material to cover. You shared your goals of what you're wanting to convey. So what are a few of the topics that are forthcoming for you in that?
So I think the last one I finished up was I think I had one that was on financials, financial awareness, or basically education. Just breaking down
financial literacy was your first one.
Yeah, financial literacy, exactly. And then I followed that one up with something that was more talking about real estate. So the next one is something that I'm involved in. I kind of go down the line of things that I know and industries and sectors that I'm in. So the next one that I'll probably release, and I've been trying now that my daughter's a little bit older. You kind of know she popped up and sprung up on us, a COVID baby, so to speak. But now that she's a little bit older, I have a little bit more time, and that my wife is starting to get reacclimated into the real, I guess the world again, and the baby can travel and go out and move around. So not to digress into that, but the podcast now that I'm probably going to start, I'm going to do one, is probably going to be on cryptocurrencies and just investment strategies in that space that I've done this year and last year. And I probably won't touch too much on the mining aspect of it, because at the end of the day, mining is so expensive, it's out of reach for most people. But everyone can invest in in Bitcoin or some of the different currencies that are out there. So I'll probably have some introduction to that. Talk a little bit about them, talk a little bit about their purpose, their usefulness, which ones I think have a real, have a future, have a runway, and which ones I think that there's a significant amount of appreciation there. So that's probably where I'll spend some time on the next podcast.
Excellent. Well, I'm looking forward to that. I enjoy listening to your podcasts. All right, so I'm going to stay on the education front for just one more question, and that is, let's go to your kids. So you have kids ranging from, I think, preteen down to pre-toddler right now. So the total of 3, and I don't want to ask too personal of questions, but I'd like to ask, how are you preparing them for the world? We know your expectations for them in terms of being investors, but what are your expectations and how are you preparing them for that?
Well, yeah. So my son, he just turned 13. My daughter just turned 11, and we've got basically a toddler. And so her education is a lot different than the other two. So we'll talk about the other two first, and we'll talk about my son, probably because he's the oldest. And so what I've been trying to really get across to my son, I played sports. And so to me, sports and education are hand in hand. I'm one of those people where I think that education, is excellent because it teaches you how to learn, teaches you how to excel at academia and academics, and how the nuances there were to be able to self-teach yourself as you get older. You need to have good study practices, understand how to read, and technical reading, I always tell people, is different than literal reading. So me and my son have already gone through that piece of it. You can't just read 20 paragraphs of technical material in one gulp, like you can literal material. You can read that in one gulp. So we've done that, and so obviously mathematics and science and all those things in my household are really, really big. I incentivize my kids with monetary incentives to do well in that area. But I think that the sports teach you how to work with others. It teaches you about commitment and, having a goal and focusing on that goal and working hard and failure and success. And, my son just recently this weekend won a tournament and got MVP in one of his basketball tournaments. So, that was good because the previous 3 or 4 tournaments, they lost. And so, it kind of shows you if you keep working at something and you keep practicing, you can keep getting better and better. And so I think having that, and also it teaches you from an athletics perspective, it just teaches you how to be in shape. So you take care of your body, you eat right, you get sleep because you've got to make sure you're in good shape, and all those things that come on. I could go on and on about that because that's one of the things I'm passionate about. But from that perspective with my kids, I try to teach them, athletics. So, staying in shape, exercise, academics, making sure you understand, you educate, you're well educated, you understand things from that perspective. And then how to push yourself and drive, not to be lazy, not to take things for granted, and then, we're all at my house very, very, spiritually inclined. And so I don't want to say anything to your listeners. I don't know where they are in the world. So I'll just,
we have a diverse audience.
Right. I'll just say that. So, we are very, very in tune with that. And so I want to make sure they're founded in morality and things that are not just, when I operate my business, is not just what I can do legally. It's also, well, what is the moral thing to do in this situation? And so I want to make sure they have a good foundation and strong morals and work ethic. So that's what I'm teaching my kids. And then at the same time, I've started to talk to my son about, investments and how to take what does that mean? How does that work? What are all the different things that are out there that you can invest in? And obviously, that I have things, set up for them so that when they get older, if they're good stewards, I just had a conversation with him the other day. I said, if you're not a good steward, you don't do this, you're on, this or that or whatever. I won't say it all on your show, but I just said, you don't get anything. And so
that's wise parenting. That really is wise parenting. Threaten him now.
Yeah. So, and then, we have a nonprofit foundation where we had a STEM foundation where we had kids on scholarships at various schools and things of that nature. So we're big on education. I'm trying to get my kids to really understand that they've got to be astute investors and, make sure that saving is not just the main part of it. For example, I didn't know anything about this, but my daughter apparently plays or has a game on her phone or something that's called Roblox. And so they recently IPO'd. So I had each one of my kids and asked them, I said, hey, well, this thing just IPO'd. Do you want to buy some shares in this? And, I'll get them for you, whatever. So both of them recently just purchased some shares of Roblox.
That's a good use of their allowance.
Yes, very good.
Will you let them take jobs before they finish high school?
Oh, most certainly. I'll digress for 1 second on that. So we had already talked about my son's first job and my daughter's too. So we live in Milton. So Milton is a little more rural than Alpharetta, but we're right next to Alpharetta. But in Milton, we have a lot of farms, horse farms, all kinds of farms. So we've picked out a farm for my son to be able to go and clean up some, to do some real heavy lifting, to do some real farm work where we're going to pay him minimum wage. So when he turns 14, we'll tell the farmer, hey, listen, my son's going to come. Don't worry about paying him. Give him the hardest work you can find. Make sure he's got the shovel, whatever he needs to do. We're going to pay him minimum wage. And so, part of that education is he gets that job. He does that for a couple of weeks or month or 2 months, whatever his break is out of school when he's not doing something else. And he's making minimum wage, and he sees what that feels like, and he sees understands, hey, this is hard work, and this is how much money I made. So two things should ring true after that, because it did for me. That's how I said, oh, okay, this is not something I want to do. Two things should ring true. I don't ever want to do that again, and that's all I made. So now when I tell you to go to school, focus on your education, try to work on getting a good job, being responsible, you got something to compare it to and reference back to.
Yeah, man, that speaks true to me as well. I'll often ask in a group, so what was the worst job you ever had? And so far, I look back to when I was in university, and I worked from, I don't know, I think my first job was eight years old, working sub minimum wage for my grandfather in his produce farm. But by the time I got to university, I'd had some fairly crappy jobs, but this one took the cake. It was I was working for a scale company that they maintained and retrofitted large scales for commercial purposes. And there was a Kroger distribution center that had a defunct truck scale that they were recommissioning, and the space go through a manhole down into the actual under space, and it was about 2 feet of sludge. Now, like yourself, I am over 6 feet tall, 6'3" for me. I think you're a little bit taller than me.
So 6'4".
What's that?
I said not much. I'm 6'4".
Oh, okay. I'll stand up. I'll sit up straight. Anyway, so I had for about 2 weeks the job of cleaning sludge out of this space. I think the highest part of the ceiling was maybe 3.5 feet, and it went down to about 2.5 feet. And at the time, I think I was just frustrated, but my goal was to get through it. And I cannot tell you how much I can look back on that as a point of saying I can do almost anything. If I can do that, I can do almost anything, and I don't want to ever have to do that again. So I think it's really good that you're positioning your kids for that and prepping them for the future. I realize that a lot of parents don't. They want their kids to focus exclusively on the official education, but sounds like you're giving them a well-rounded experience. What are you expecting for life for your now 7-month-old when she is an adult? What will the world look like, and how do you prepare for that?
Man, I don't know, man. One day at a time. We didn't plan to have a third one. I mean, our window of time passed, and I guess it was in the cards. That's all I can say. And so, I don't know. I mean, what I plan to do with this one is make sure that I'm beyond that semi-retired to full retired, and just have a lot more time. I'll tell you, to be honest with you, one of the blessings that's come from this whole COVID thing is that my kids are about the age where my businesses were I was just really busy. My son's 13, and my daughter's 11, and I wasn't home that much, either from travel or from work, or employees are doing what. And this year, I've been able to take them to school every day when they go, and be in carpool, picking them up, and going to games. And I coach my son's team this year because they couldn't find a coach, so I've been coaching his team, and parents aren't happy. You know how that is, but I've been trying to do the best job I can. And so I've been able to do that. My daughters go to some of her swim meets, so I've been able to be around the family a lot more. And with my youngest daughter, the newborn, I've been babysitting a little bit. I guess it's not babysitting when it's your kid, but I call it babysitting because I don't do it as good as mom, but she's been able to hang out with me. I'll tell you, sometimes I'm on a call or a conference call where I don't have to do video or anything. And we're literally she's literally right here with me. She'll be looking on the screen at somebody and she'll be like, well, what is that? What's going on? So
she's on your lap now. She's being really quiet, LeVar.
No, she's not here now because she's at that age now where you really can't have her on because she's starting to figure out that she has a voice, and she's starting to try to put. You're kind of at that development age where they can't speak yet, but they can make sounds, and they're starting to figure out how to talk. If you remember that, but she's definitely, I don't know. I mean, what I expect from her, what I'm looking at, it's so far away. Just one day at a time. One day at a time.
That's a fair answer. It is a long ways away before she will be a full-fledged adult. I just can't imagine at the speed of change what that will be like. But rather exciting, and I think just based on what I know of how you've raised her older sister and brother, she's going to be well positioned for it. You know what? I think we're going to wrap up here fairly soon. So I'm just going to ask you two more questions. And the first one is I want to digress to commercial real estate. That's been a significant part of your portfolio. In just a few words, what are your expectations for a rebound or what will be a new reality for commercial real estate post COVID-19? And when might that bounce back, if at all?
Yeah. So commercial real estate will definitely bounce back. I think that people always, you had a big shift to e-commerce, but the challenge with e-commerce is that it really takes jobs out of a local community. And then the other thing with that is it's not something people like to get out and they like to go touch, feel, they like the experience. The senses are not the same. The sensory connection is not the same with e-commerce, but essentially it's convenient. But I think that over time, what will happen is in commercial real estate in all sorts, whether it be Class A, Class B, C, or even if it's retail or if it's, office space, the need for that space will change. So whereas before a lot of spaces were restaurants and maybe fitness and things of that nature, they'll shift to other things that are more neighborhood centric or more community centric. Things that you really can't or not as beneficial to go, online to get or do. So I think that's what you'll see. You'll see some places where the big centers shrink, but the real estate is still real estate. So they're subdivided, or there's a mixed use development that's there to where people can have a cup of coffee and maybe they can catch a movie or rent something or do something there, or they can live right there. I mean, I see that real estate is changing in that way. So it's all like community, work, live type of things. I think you'll have more centers to where, because people are able to work remote more often, as they continue to develop smart cities and 5G and that rolls out, I think you'll start to have centers where there's more collaboration between different entrepreneurs and businesses and people that don't have to live in a specific area, but they still feel the need to get out the house and go work somewhere. So commercial real estate is all cyclical. So, when I look at it, as I mentioned yesterday and I mentioned earlier in our discussion, I look at the cycles. And so where are we at in the cycle? So we're not at the bottom of the cycle because the bottom of the cycle was last year, but we haven't really got through to where we'll see some leaning out in the commercial real estate space because you'll start to see where some people the PPP money will run out, all the different loans will run out, and those businesses that have been on life support will just die. And when that happens, those real estate, those pieces of real estate that were heavily invested or involved with that, they're going to struggle. And so there'll be some opportunities within the next 24, 36 months to pick up those properties that have been really distressed because of that. And then after that, I think you'll start to see an uptake in the commercial real estate of all kinds. You'll start to see that start to peak back up. You'll start to see vacancies, go down. You'll start to see, prices and things go up and continue on that manner. Now, residential's in a whole different sphere because depending on where you're at in the country, you've either been open or closed, or there's an income tax situation that's more preferable to high net worth individuals or what. So that's different. But what you're going to see in that regard is there's a lot of people that have taken the forbearance and have been on forbearance, and they're still on forbearance. Every time they extend or they come out with more money and they extend something, that forbearance gets extended. So long story short, when that comes to a head, the real estate market, the residential real estate market is going to, in my opinion, is going to tank big time, and then it'll rebound. So there'll be a lot of opportunities there. And I think that's going to happen within the next 12 to 24 months.
Wow, thanks very much. That's I appreciate your perspective on that. My last question for you is very vague question but what's next?
Well, so I mentioned the two things that I'm looking at this year with some local individuals that are trying to raise some capital to do some things. So a sports complex is something that I'm looking at here in the Alpharetta area. And the other thing is this car dealership that a friend of mine wants to embark on. So I figure, hey, I like cars. Maybe I get a good deal on one if I'm investing in one. So those are the things that are on the immediate horizon. And then just more. I've been doing a lot of public equity stuff and just a lot of sector driven stuff. And I've just been enjoying a lot of day trading with cryptocurrencies and in particular Bitcoin. I've been having little groups and little classes on day trading with Bitcoin. I've got about 30 people that I've been helping to navigate that, and that's been a lot of fun. So we're up for the year, obviously.
Hey,
it's been a lot of fun.
It's hard not to be, isn't it?
Yeah.
I didn't mean that to disparage your day trading capabilities. I'm sure that your version of up is stronger than many. Hey, LeVar, this has been phenomenal. I really appreciate being able to get you behind the camera to have a chat. And I'm thinking right now that I look forward to folks coming to our future events, meeting you, and just meeting the. We have a really remarkable group of people involved with Obris, and you're a stellar example of that. So. Thanks for sharing your time with us today, and it's great to get some insight into what it's like to be a mid-40s semi-retired professional with a tremendous outlook for the future. So thank you very much.
No problem, man. Thank you. Have a great day, and it's been great being on today.
Thanks for joining us for the Global Investor Podcast. If you like what you've heard, we have much more to offer you. Be sure to subscribe to our YouTube channel or to the podcast itself. Obris is an investor syndicate. We are defined by people, places, and deals. Our members and guests are an amazing group of self-made and accomplished investors and entrepreneurs. We come from 15 different countries and a wide variety of professions. We share the common pursuits of surrounding ourselves with great people in great places while gaining significant returns in investing. Please head over to our website, obrisinvest.com, where you can learn more about Obris, our members, investing with us, and our world-class events. That's obrisinvest.com. We also invite you to sign up for our free Global Investor newsletter. You'll have access to our weekly insights as well as deep dives into specific industries and global markets. And be sure to come to an Obris event. There is no better way to get to know us than through our events. We are currently working on our next live in-person event. Check out our website for details. My partners and I created Obris to facilitate freedom, wealth, adventure, and connection. With Obris, you'll experience a whole new world of investing.